It's now time to dissect the topic of the week. New Gold is a gold ETF that was brought to the market by Absa Capital. Today, New Gold has investors of more than 18 billion rand. How does this ETF work and what are the benefits of ownership? Gentlemen, welcome to the program. Thank you so much for joining us today. When you look at gold as an asset class, and I suppose the history of gold, it was literally a currency. It is still viewed as an alternative currency. It's viewed as a hedge against inflation, a safe haven asset, something that rallies during a low interest rate environment. And this is why gold is actually doing quite well today. What has history taught us with regards to gold? Vladimir.
Well, I mean, as you said, gold has been around for thousands of years. And up until very recently, it was really the only ways to invest in gold was either buying jewelry or for institutional investors to buy gold in the spot market. But it was a very specialized asset class. Now, from 2003, the new way of investing in gold has become the new category of exchange-traded funds called gold ETFs. Basically, it is a relatively simple concept. You have some kind of a special purpose vehicle. It's either a trust or a company holding the gold bullion and issuing securities that are linked to that
so physically
gold bullion.
backed ETFs is
it's
what you're alluding to.
It's a physically backed ETF. And that physically backed nature of it is quite important because the investors really, one of the important elements of gold or investing in gold is security that it allows. And investors do want to be certain that there is no credit risk or any other risk associated with it. They want to be able to possess or to the asset to be secure and to be able to have full security of it.
Vladimir, maybe just a question from my side. I mean, if you look at a gold ETF and you look internationally at gold ETFs, the onus isn't ever on the issuer of the ETF to ever pay out a physical gold. So let's assume that I bet on gold and I believe there's going to be a complete meltdown in the world. There's nowhere does it say that the ETF provider has to ever pay out physical gold.
Actually, you're wrong. It does.
Okay.
All the ETFs has a built-in feature where the investors can exchange the securities they hold, the ETF they hold, for the underlying. Even in the case of New Gold, in South Africa, as you know, we have exchange controls and we have limitations regarding the ownership of gold. But even in South Africa, for the investors that have a license or the permit to hold gold, they can come to us and says, I have 1 million New Gold securities. Can you please give me the physical gold underlying those securities? Choice. That is a choice, and most people, we haven't had any instances of that, but people have that option, and that is also
an important option. Yeah.
And that is important. First, giving people kind of security, and also it allows that exchangeability of the physical for the security. It makes sure that the security itself is always tracked the underlying, because obviously if it starts diverging, somebody will arbitrage it out.
I mean, with SPDR gold in the US working exactly the way, I mean, it's famously called Spider Gold. It's also an ETF. Sure. Would it work in exactly the same way? It's
exactly the same way. Basically, the history of this is in kind of 2002, 2003, Australia, South Africa, and the UK, we basically started developing gold ETFs on a very similar basis. The World Gold Council has been involved in creation of that. So all the gold ETFs that exist, or the major ones, are really based on a very, very similar principles. The costs are the same, the features are the same. The US gold ETF was listed a couple of months after our New Gold, and again, they all operate on the same basis.
And as a matter of fact, if you just look on screen, sorry, Eleni, quickly, you'll see the quantity of gold held in ounces, and this is specifically a New Gold, and you can see how that's kind of run up since 2006 to where we are right now. And that's in order to back up, actually, the physical cash element inside the ETF. These are the unit holders, so to speak.
Roland, let's go over to you. Regulation 28 now allowing pension funds to allocate 10% to gold. Do you think this is a fair number, or do you think it's slightly high or low?
I think it's allowed more flexibility, and I think that flexibility is important. We're certainly seeing in Europe much more active use of gold in long-term kind of pension fund holdings. People are very excited over the last 10 years to have multiple asset classes because asset classes tend to be lowly correlated. So, we used to be in the world of cash bonds, equity, and property. We now have all sorts of, they're called exotic, but they've been around for a long time. So we have now the ability to hold gold as a strategic allocation in the long run. And that's not necessarily a return argument, it's much more of a risk argument, just because gold is very uncorrelated. And it is a great hedge against crises. And when you need protection or some kind of asset class to perform during a crisis, most asset classes become highly correlated except gold. That sort of goes the opposite way.
It's interesting when you look at gold in dollar terms, then we know that it's literally seen as a safe haven asset, and also
Correct.
it really performs well in a very low interest rate environment. And this was really evident during the 1980s, where we saw gold hitting an all-time high of above $800 a fine ounce, and then suddenly plummeting when the US started hiking rates to try and deal with an inflationary scenario. But in Rand terms, are we looking at the same factors that are pushing the Rand gold price?
Well, there is a couple of fundamental factors, and you mentioned some, but let's go one step back. I think fundamental factor that determines the price of any asset is really supply and demand, and gold is a physical asset, and you have kind of standard sources of supply, i.e. the gold mines and the government selling and so on. But you also have standard sources of demand in the physical market. What has happened, and that is something that I think in my view differentiates this particular situation with the gold price from what's been happening in the late 80s, is the fact that we have an additional source of demand, which is the physical ETFs. I mean, we are talking about 1,200 tons of gold sitting in the vault, underpinning all the gold ETFs worldwide, and that is quite significant. So it provides a floor to the gold price.
So tell me, if we start seeing a big liquidation out of the gold ETF market, does that mean then oversupply of gold into the market, and then the price of gold coming under pressure?
It is obviously, if people start selling, it will put pressure on the gold price. But what we have experiencing is that actually we have more people buying than selling. Even the central banks that have historically since the World War II net sellers of gold.
And always getting it wrong, obviously, for
Yes.
many years, selling at the wrong points and buying at the wrong points.
And now they have been, over the last 4 or 5 years, even some big central banks have been buying gold or not selling as they were allowed to do. So I think, given the overall economic situation and the issues with dollar and the debt and the other currencies, I think gold is a pretty good asset.
Kobe, let's get a sense from you. Do you have exposure to gold? Do you want to have exposure to
Nope.
gold?
Nope.
Why?
Nope.
Alternative. I mean, even the World Bank president Robert Zedek says we could be returning to the gold standard.
Let me make this point. I want you to look on your screen right now, because it shows you the price of gold in dollars relative to the S&P 500 and relative to global bonds. Now, we sit in the South African context, and the South African market has done.
This is your explanation as to why you don't have exposure to gold.
Well, hopefully it leads to that. If you look at the South African market over the last decade, I suppose the return in the South African market has been in between 11 and 12%. You certainly could have done far better owning gold. But if you were in the American situation, slightly worse, because you've literally sat with a negative return over the last decade. Just have a look at that. That's on your screen, and you can see I've ranked the 3 different asset classes relative to each other. And you can see how many times gold since 2000 has been ranked number 1. So you can see this asset class has actually been in favor. And it's been in favor because the returns have been good. And the returns have been good because we sat with an exorbitant amount of capital in the system, and that has led to a fearful situation because we've sat with a debt overhang. So both of those things are pretty good for the gold price. The question that I continuously have inside an investment team and also just generally is, what is the fundamental value for gold? If I can set the fundamental value for gold, I could understand if it's overpriced or underpriced. But because I have no understanding of the fundamentals or the fundamental price that gold should be trading at, why should one be owning it then?
What's the fundamental value of any currency?
Well, again, you see, that's why we come back to, if you're doing portfolio construction, surely the one thing that one should be doing is one should be looking at cash flows and returns and earnings and various other things in order to understand what is an intrinsic value of what you're buying. And I mean, certainly from a regression perspective, if you want to take that into consideration, surely one then looks at it and says, okay, well, fine, this asset price is relatively decently priced relative to its long-term averages, and its prospects don't look so bad. But if you come to a currency or you come to something like the gold price, it's pretty difficult to do that. And my question I always have to go for gold people is, what is that price? If somebody can give me a valuation methodology, absolutely, I'm prepared to use
well,
it.
given the fact that it is the oldest currency in the world, and given the fact that we had the gold standard not too long ago, you've also got to take into consideration that the deterioration in sentiment with regards to the value of currencies globally, and the fact that central banks have been intervening to try and weaken their currencies makes investors worry as to the fate of the euro, the fate of the US dollar, the fate of the Japanese yen. Isn't that then creating a value in itself for gold?
Well, that's the point sort of Vladimir was hinting at, is gold valuation depends on currency valuations, and it depends on sentiment and confidence. And I think in the current environment, we certainly have a high degree of fear and uncertainty with currencies, and especially with all the money floating around. So if the dollar does weaken, this asset class could hold up a lot better than other asset classes. But just an interesting point on gold that people often ignore is they say it's very volatile. The gold shares, so Harmony, Anglo Gold, the kind of gold companies, are geared to the gold price and have about an annual volatility of about 40 to 50%. The gold price itself has got an annual volatility between 10 and 20%. So it is a third of the volatility of the actual gold shares.
But you've also got to take the rand into consideration there, or are you talking about the rand gold price relative to the mines?
Yeah, the rand gold price will obviously have a higher volatility, but it's still less than the stocks that we're very comfortable to trade all the time, which are much more risky than actually the physical gold.
Because of the cost implications and the fact that we're mining deeper.
No, it's the gearing. The companies are geared to the gold price because they obviously their operational profit is very dependent on moves in the gold price.
But look, let me say this, that if you were going to own gold, if you were in the business of owning gold, it's probably much better for you to own new gold than it is for you to own a gold company. Because quite frankly, these gold companies, their ability to create earnings and dividend flow out of the earnings and various other things is pretty much limited, and it's pretty difficult for them to do so. So if you want a pure play on gold, new gold is probably the one thing that you should be considering.
And one of the things that people, of course, and investors, Vladimir, are they move away and they're very reticent to buy gold is because you actually pay to hold gold. And of course, and that really comes down to the interest rate environment. We know margin requirements have been increased by COMEX, by the Shanghai Gold Exchange. So again, you're paying to hold this asset class. Is that a deterrent?
We have, in our experience, no. We have had lots of people kind of buying new gold, and when you consider the costs of entering into this asset class, doing it through an ETF is much cheaper than doing it in any other way. So basically, you would have to generally to pay for as a retail investor, it is completely, you just wouldn't be able to participate in the proper spot market. As an institution, you would have to pay for storage, for insurance. So that is all priced in.
But what is the total expense ratio?
The total expense ratio for new gold is 40 basis points, 0.4%.
That's cheaper than
which is extremely cheap.
Than an active fund.
Oh, by far.
By a long shot.
Yeah. The one thing that I think we haven't talked about regarding gold and other investments, and you said about fundamental value. One other thing that distinguishes gold from others is that if you own a share, if you own a debt instrument, you have an inherent default risk. The company can go out of business, or the company can default on its debt. So one of the fundamental issues with holding any security is that you don't know what that piece of paper is worth. With gold, there is no credit risk, because you're actually holding the underlying asset, and that was one of the big factors behind people going into gold after the credit cards. Yeah.
I mean, this is the reason why people are owning gold today, because people are saying, well, is this, my currency is written on a piece of paper, is it even worth this piece of paper?
Absolutely.
Why am I owning this? And that's why you're seeing gold going. I want to ask a question to both of you. I mean, you guys are both quants. Strip all the fear out the system today. strip everything out, and we just go back to a normal business cycle, what happens to the price of gold?
Okay, if interest rates, can I answer that from my perspective, who doesn't know very much? Purely because of the low interest rate environment, I suspect that there still will be strong flows into gold. My suspicion. I'm not sure. Vladimir, you probably know. And inflation.
Again, on my side, if you take the fear factor and all that, then we're back to the macro argument, supply and demand. What is the annual demand for gold in various usages, from jewelry, from India, China,
technology,
to gold ETFs? What is the gold supply? And basically, the price will go where you find an equilibrium.
Sure.
You have to take into account, though, that the gold production is not infinite. We have South Africa was the #1 gold producer in the world until recently. Now it's number 3 or 4.
Yeah, we're number 3, and China's
Exactly.
actually #1.
So the production is not infinite.
No, absolutely, no, it's
Roland,
finite.
as a quant, answer that for us.
I would always hold a position in gold as a hedge against crises.
And so you still see it as a sort of an Armageddon play. Fantastic. We're taking a very short break. When we come back, we'll be analysing the Absa New Gold ETF. We'll see you right after this.